All right, so today I'm just going to be going over effort reward using the tape reading chart, and basically use any chart, but the concept must be understood. It must be understood in the context of the Wyckoff cycle, which is accumulation, markup, distribution, markdown, accumulation, markup, distribution, markdown, accumulation, markup, distribution, markdown, right? So, and that's all part of markup over here because this is minor or reaccumulation, and then markup or a rally, and then distribution was just a rotation, and then markdown here, which is just a pullback, and rinse and repeat again and again, and that's all part of that uptrend or markup from a higher time frame. So you have minor reaccumulation and minor distribution. You have minor climaxes and all of that. All right, because you have cycles within cycles and time frames, higher and lower time frames. So this entire uptrend that looks like markup here could just be a pullback on a higher time frame. So like for example, this 5-minute or 10-minute or 15-minute could just be a markup, but on a daily and above, it looks like a pullback. Because higher and lower time frames and buying and selling in multiple time frames. The second thing I want to mention is effort reward. So here's an example. You have XXXX. This is 4 X's, and it does say 100 volume. Then you have 3 X's that does 150 volume. So you have more volume, less height. That's effort. Why? Because you have more volume giving you less reward or less price movement to the upside relative to the prior column of X's. So that's effort. Why is this important? Because as the market moves up and is in markup, before the rotation and during the rotation, it's going to have effort. Meaning what's causing the pullback here is the effort that's stopping the move up and in effort in the base, and then it pulls back. So price is unable to go higher because of the volume, and that volume is your effort, or basically sellers. And then on the way back down on the pullback, there's typically effort again, and it's visible as the market is going down. You have effort, and that is buyers coming in. And then when it goes into a base, more effort, that's buyers buying up everything in order to go up again. So that's why the volume will show the buyers and sellers, and those buyers and sellers are creating the pullbacks as well as the rallies, because they're stopping the up movement and reigniting the up movement on the pullback to go to the next rally. So this is why it's really important. Now another two caveats is there are times when you have to know where the effort is occurring. Is it at the top of the trend or bottom of a trend that is a mid consolidation? Because the effort could just be because of the breakout volume. There's just so much heavy breakout volume that's really not effort. It's actually effort to go up, not down. Effort to go up because it's breaking through a resistance level with a lot of volume. In that case, this is not effort. It's actually just breakout volume and sometimes absorption volume that's just taking out the highs. So these are the 3 cases. It could be effort, it could be a breakout volume, or it could be typically absorption volume has that heavy volume in the resistance areas. So you'll know what it is just by taking a look at it, the position of the trend and all of that. It's important not to just say, okay, this is more volume and less price movement, it must be effort and it's going to reverse. It's important not to have that opinion, because it could be absorbing, and as it's absorbing the resistance area, it's building volume, more and more and more absorption because of a strong resistance level, and it's going to look like a lot of volume, and it's going to look like effort, but it's actually absorption. Okay, all right, let's go to the chart. All right, now keep in mind this Wyckoff price cycle of accumulation, markup, distribution, markdown, reaccumulation, markup, distribution, markdown, again and again and again. Keep in mind how effort is stopping the up move or the down move, and then it's coming back in to reignite the up move or the down move. Okay? Alright, so I'll just take a simple example of the ES. So what are we doing here is we're just going to analyze the trend. Sometimes it's clear, folks, sometimes it's not. All right, so you just have to, you always have to use judgment. I don't know where to start from, but I mean the obvious. Okay, let's start from here. This is some obvious effort. Okay, I'll show it. Anyway, so right here, this 104 is effort. How do you know that that's effort? First of all, look at the height and then look at the volume. Or you want to look at the volume and then the height, doesn't really matter. Just take a look at that and the past. So I'm just looking at the past and taking this reference point of 1, 2, 3, 4 boxes for the hell you call them? We have boxes. All right, 93,000, 4 boxes. Here, 104,000, 3 boxes. All right, so 104 is greater than 93, and it doesn't do a lot of reward. It doesn't do a lot of reward, right? In fact, it's white box. They're colored white because it's heavy volume, and that is evidence that there's a problem, meaning there's some resistance, there's some selling, there's some whatever. Right now, you want to take a look at this in the context of the move and in the context of the left-hand side. Oh, okay, so here we have a breakdown. It's testing the breakdown. There's a lot of effort, which means sellers are coming back on the test of the breakdown. So again, you're looking at this at the context of the trend position, because it starts going making higher highs. Looking at the context of the left-hand side, and with that in mind, then comparing the volume and price movement to prior areas of volume and price movement. And then one more thing, effort by itself, you're not going to be sure until you have the break. All right, so the break confirms the effort. So you have all this effort, you have the, it's like pulling back at the top of the pullback. I don't know why I said trend before, but I meant pullback here. And then on the left-hand side, you have selling area breakdown. And now you have that reversal break right here, that break or that reversal. So you know this was effort. And then you get it on the retest. All right, now the market goes down, down, down. 98, 36, 94. I don't really see any effort here, here. There's a lot of volume, but I don't see it as, I mean, you could say that this 116 is bigger than this 94, and therefore it is effort. You could make that right, but I would like it to be a little more obvious. But here 94 on this selling climax, here 116, which is greater than 94 and less height. Here you have 1, 2, 3, 4, 5, 6, 7 boxes. Here you have 1, 2, 3, 4. 4 is 4 here and 7 here. Yet these 4 have more volume than that 7. But I'm not going to use this. I like it to be more obvious, and this was in the session at the open. This thing's a little crazy. So, that's fine. Let's just say, but this technically would be, but whatever. All right, now let's just go into the next examples. So 78, 66, 49, 42, 40, 18, 12, 67. There is some effort here on this resistance, right? And then it goes down and gives a very small move. So nothing spectacular, probably break even. All right, so 87. Here you have to be careful and understand that, like I told you, the second example of it not, is it effort or is it breaking out and absorbing this area? In this case, as it comes down, it hits that area and it becomes a breakout or absorbing that area because of the break above the high with this X above the resistance area. All right, so if you're not sure, just back off. Like, you just don't know. And you just wait for you look at the other bar charts in conjunction with this and it'll give you more clarity. Okay, and now it goes up here and now we continue. 9, 30, 10. Now, nothing on the sell side. I don't see any effort here. So now it's making higher highs. It's on buys. Start looking 24, 22, 95, 33, 51. This is something going on here for sure. Why? Because you have multiple highs and it's on buys, right? But here, the 33 to 51, come on. Something going on, right? 33 has 1, 2, 3, 4. 51 has 1, 2, 3. So less height and more effort. Less height with only 3 boxes instead of 4, and more effort. So something's going up here. Now you wait for as I explained, that effort needs to be confirmed, meaning you need to break, directional break. This is the break right here. Right here it breaks. It breaks right here. So you know that there's effort. It was hard to make this high. It was difficult to make this high. And after that, the market went down. Now this is going to offer you entry and it goes down. All right, there's one other effort and that's right here. 44. And before that, you only had 23. 23, 3 boxes, 44, 2 boxes. Something's going on. How do you know if it's effort or not? Is it breaking out? Is it absorbing? Or do you get a reversal? You get a reversal. Something's up. Something's up. You get a reversal. Now the market's going to test and give you the trade. All right, now this looks easy in terms of, oh yeah, just the number and the height of the columns. But you want to combine this with what's in the background, what's in the background in terms of where are you on the top of the trend or in the top of the pullback, right? And then what's on the left-hand side? What's happening afterwards? Is there reaction? And then what else do you want to really do is, there's other things that I'm looking at, right? Like over here, I know this is a very strong case because there's a lot of volume up here. That's indicated by the white boxes. There's a base that's starting to form. Right, so, and then also the time of day and things like that, where you know that the move is ready, move is being, the sellers are going to take it down, right? So this is the turning point, that minor distribution, and the puke fest right here. There was one other thing, but I can't recall. Sorry, I just can't recall it. And then it goes down. There is. When it comes back into this minor accumulation area, you see it goes from 68 to 81. What's up with that? 68 to 81 increase in volume. And now it's the same height, but an increase in volume of about 33%. So something's up. All right. So we'll take a look at some examples here again. For example, right here, this goes up on 29. 29. Prior, same amount of height had only 12, and afterwards you had a break. So this effort, clear effort, right? So there's some minor effort here. You can't really see it too clearly, but it goes from 28 to 37. There's some effort there, followed by a break. And finally you get a retest with a little up thrust and then a puke test. Alright, so again here, this is a clear one. All of this distribution in the background, this is all planning. This is planning right here. Right? We have effort here where it goes from 11 to 30 and then has a break. You also have effort here where it goes from 12, doing 3 boxes, 12, and here 55. 55. Clearly that's effort, right? And it's not just the volume and the height, but looking at the background, looking at the top of a retest, it's effort. Right? All right, folks, I'm done. Have a good day. You can try this on any type of chart. You don't need this chart. You can try it on your wave chart. You could even try it on a daily bar chart. The daily bar chart is excellent in that it'll show you effort reward. It'll also show you climaxes. So you could try this activity on the daily bar chart with volume. You could also try it on an intraday chart, but intraday volume chart, intraday bar chart, the volume is all broken up into 5 or 10 minute intervals, whatever the periodicity is. So you want to use wave volume, and you can see it on the waves. All right, take care, bye.